Hi everyone, welcome back to the channel. You probably know that of late this channel has been quite quiet, but we have planned great stuff for you so that you can see my partner over here.
Hi, I'm Kelvin.
Yeah, so Kelvin and myself are going to answer a series of questions from investors today. And today, the first video that we wanted to create for all of you is to really answer this question called, should I or should we be investing only in S&P 500 and not in other assets itself? So what do you think? Okay, do comment below and give us your thoughts also as we're going to share our thoughts with you. So Kelvin, what do you think?
Well, I think it depends.
Okay.
There are some pros and cons about S&P 500, and then you have to think about what are the things.
Yeah, definitely there are always pros and cons into the investment that we are talking about. And so what are some pros and cons you are talking about?
Well, S&P 500, so it's all about diversification and how you can actually make your portfolio more efficient and improve the performance.
Interesting. So diversification basically means reducing my risk.
Yes, correct.
Okay, so portfolio performance means increasing the return that I can get as an investor. Am I right to say that?
Correct.
So what are the areas that we need to look at?
Well, there are actually 4 factors you have to look at.
Okay.
The geography, which markets you are in, the sectors, the type of sectors you have, like different kind of industries, and then there will be the currency risk, and also what was that again?
The asset.
Yes, the asset classes.
So these are the 4 factors that you can look at. So we are going to go through it individually with you. So let's go into the first one. So the first one is like what Kelvin said, right? Is geography. So you look at it. If you're investing in S&P 500, you are only investing in the top 500 US companies. In this world that we live in today, are there other countries that actually have great companies in the world? What do you think?
I think in Europe and China, even Japan, there are a lot of companies they are actually doing well. Like maybe in Japan will be Rakuten.
Yep.
Then in China will be Alibaba, Tencent.
Yeah. So again, it's geographic risk or geographic exposure you have as an investor. So do you want to only invest and expose yourself to just US or a global market as we live in today's world? What about number 2? What's the second factor?
The sectors that you are in. So like let's
Okay.
say we have the tech industry which was doing very well during during the COVID times.
Yep.
And then there was health sciences, which always generated very stable returns.
Okay. So how many sectors are there?
Actually there are about 11 sectors you
Wow,
can consider
wow,
about.
Wow.
So like during different kind of crises or different kind of scenarios, you can look at which industries, which sectors that you feel they will be performing well. You can actually go for their funds.
Yeah. So coming back to sectors like what Kelvin here said, right? There are 11 sectors. So at different market conditions, we might not want to expose to that industry.
Yes.
I mean, like one good example is like what he was talking about is COVID, right? The tourism sector probably was badly hit. So imagine if you are putting your money in S&P 500, which also comprises of the tourism industry, right? Then do you want yourself to be exposed to this industry, right? The answer is really depending on you, right? For me and probably for Kelvin, we prefer not to be exposed to that and shift our money into the assets or the sectors that are actually profiting during this time. What about the third factor?
Third factor, the asset classes.
Okay.
You see in asset classes, right? If you are in S&P 500, most of your assets are actually just equities. So equities are very heavily overweight when it comes to risk.
Yep. So it really depends on your time horizon. Right? If you have a shorter time horizon, probably putting 100% equity might not be advisable for you.
Yeah.
And if your time horizon is shorter, probably you want your risk appetite to be a bit more moderate or even lower, because once your time horizon is shorter, you actually want to be certain of the cash flow from the assets that you are investing for yourself today. So really understanding your risk appetite and exposure again and again is repeated in this conversation, right? So just to name a few assets that are other than equity is really like your bonds, it could be even like your fixed income, a balanced portfolio, it could be also commodity, it could be also a money market funds in a sense. So these are the other assets that we can look into. And what about the fourth factor?
Lastly, fourth factor would be currency risk lah.
Okay.
You look at the US dollar strengthening because investors still have a lot of confidence in them lah. Because largely most of the investments are based on US dollars ma.
Yep.
So let's say you are buying your your investments, right? You are investing with US dollars, but you are paying with Sing dollars. That means you'll be paying more Sing dollars just to get the same amount with US dollars.
Yep. So it really depends on, let's say, the currency movement up and down.
Yeah.
So basically strengthen or weaken. Then if it strengthen, it's actually a disadvantage to investor. But if it weaken, then it's an advantage because we are able to buy it at a cheaper price or a cheaper value in a sense. Right? So again, it's like you need to understand the kind of risk exposure you have when you are investing into just for a purely S&P 500 portfolio lah. Okay. So of course, these are many thoughts that we have shared with all of you.
Yeah.
Do comment below what are your thoughts after our sharing. So in ending, right, I think what we want to let everyone know, right, there is actually no what.
There's no right or wrong approach, and then it's all depending on your risk appetite.
Yep. And also your time horizon.
Correct.
Right, whether you prefer a longer time horizon that you can have more exposure into equity, or a shorter time horizon where you have shorter risk exposure, right? And generally what we are trying to say is that it is really depending on your choice, what kind of investment portfolio you want for yourself over the time horizon you have. And at the end of the day, I think these two words is very important. What's the two words we want everyone to know?
Due diligence, do your homework.
Yeah, so really do your homework. If you're not able to do your homework thoroughly, obviously speak to someone that is able to help you with the journey that you have in the investment space. Okay, so again, thank you for watching this video, and we hope to hear from you. So at the end of the day, do subscribe to the channel, do like the video, do share the video, do comment below, and turn on the notification bell, and we'll like to see you on the second video onwards. Bye everyone.